9 to 1. That's the insider sell-to-buy ratio that hit in early 2024, the most extreme in history. Jeff Bezos dumped $8.5 billion in Amazon in February 2024. Mark Zuckerberg sold over $1 billion in Meta. Jamie Dimon sold $150 million in JP Morgan, his first sale in 18 years. The Walton family cashed out over $2 billion in Walmart. This exact pattern happened in 2007, before the 57% crash. And now we're in December 2025, 12 months after peak insider selling. If history repeats, we're right in the middle of the crash timeline. I'm going to show you exactly how coordinated selling creates crashes, where that money actually went, and why we're watching the 2007 pattern play out in real time right now. Here's what they're not telling you. When billionaires sell this much stock simultaneously, it doesn't just signal a crash coming. It causes the crash. Let me show you the mechanism, because once you understand how this works, you'll see we're not watching a market correction. We're watching an orchestrated extraction. The 2007 playbook is being run again, and retail investors, the people who bought what insiders sold in 2024, they're the exit liquidity by design. This is how late-stage empires loot the system before collapse. Let's start with the numbers from 2024 because the scale matters. In February 2024, Bezos sold $8.5 billion in Amazon stock over 9 days. That's 50 million shares. He hadn't sold that aggressively in years. Mark Zuckerberg sold over $1.4 billion in Meta shares between November 2023 and February 2024. The sales accelerated as Meta stock hit all-time highs. Jamie Dimon, JP Morgan Chase CEO, sold $150 million in February 2024. This was his first stock sale ever in 18 years running the bank. Not a single share sold in nearly 2 decades. Then suddenly, at market peaks, he exits. The Walton family sold $2.3 billion in Walmart between December 2023 and February 2024. Leon Black, Apollo Global Management co-founder, sold $173 million in February 2024. His first sale ever since founding the firm in 1990. Alphabet executives ramped up selling throughout 2024. Sundar Pichai sold more stock in 2024 than all of 2023. Warren Buffett held over $300 billion in cash by end of 2024 while selling Bank of America and Apple, not buying anything. These weren't isolated decisions. This was coordinated. The sell-to-buy ratio among insiders hit 9 to 1 in early 2024, the highest since first quarter 2021 according to Verity, which tracks insider trading. Normal ratio is about 3 to 1. 9 to 1 is extreme. Now here's where we are in December 2025. It's been 10 to 12 months since peak insider selling in early 2024. The selling continues. Bezos sold another 1.5 billion shares in July 2025. Zuckerberg continues monthly sales through 2025. But the big event was 2024. Now we're watching what comes next. If the 2007 pattern holds, we're right in the window where stress starts appearing before full crisis hits. Let me show you that pattern. Here's the mechanism Wall Street doesn't explain. When insiders sell billions simultaneously, it creates downward pressure on stock prices. Not immediately. The sales are structured through 10b5-1 trading plans, pre-scheduled to avoid insider trading charges, but the effect is mechanical. Billions of dollars of supply hits the market. Supply increases, prices fall. As prices fall, retail investors holding those stocks on margin get margin calls. Their brokers demand more collateral. If they can't provide it, the broker auto-liquidates their positions. That selling creates more downward pressure, more margin calls, more forced liquidation. This is a cascade. The insiders who sold at the top in 2024 are out. The retail investors who bought what they sold are about to get wiped out. This isn't prediction. This is orchestration. The selling creates the crash. Now let me show you this exact pattern in 2007 because history is our guide. Early 2007, insider selling hit record levels for that time. Mozilo, Countrywide CEO, sold $140 million between November 2006 and August 2007. Countrywide was the largest mortgage lender in America. Mozilo knew the subprime loans were toxic. He called them toxic in internal emails. He said the company was flying blind on adjustable rate mortgages. But publicly, he told investors Countrywide was sound. He used shareholder funds to buy back stock to support the price. While telling everyone else to buy, he sold 140 million. The SEC charged him with insider trading and securities fraud in 2009. He settled for 67.5 million and a lifetime ban, but he kept most of the money. Countrywide collapsed. Bank of America bought it for 4 billion, cost them 50 billion in losses. Fuld, Lehman Brothers CEO, cashed out 350 million between 2000 and 2007. Lehman filed for bankruptcy September 15, 2008. Fuld sold at the peak. Shareholders wiped out. Stanley O'Neill, Merrill Lynch CEO, sold millions before Merrill's collapse. The bank was sold to Bank of America in a fire sale in 2008. These men didn't predict the crash. They created it by selling, then left retail investors holding the bag. This is the 2007 pattern. Peak insider selling early 2007. 12 to 18 months later, full crisis. Market crashed 57%. We're now in December 2025, 10 to 12 months after peak selling in early 2024. Right in that window. Now let's talk about where the money went in 2024, because this is what nobody explains. When billionaires sell 8.5 billion, 150 million, billions in stock, where does that cash go? Follow the money and you see the real strategy. First, gold. Physical gold purchases by high-net-worth individuals surged in 2023 and 2024. Central banks bought record amounts. Billionaires don't report purchases publicly. They buy through private dealers, offshore accounts, family offices. Why gold? Currency collapse insurance. When fiat currencies lose value, gold holds purchasing power. Second, farmland. Bill Gates is the largest private farmland owner in America. Over 268,000 acres across 18 states. Why farmland? Productive real assets. It generates food. Food demand doesn't disappear in recessions, and as fiat currency loses value, productive land appreciates. You can't print more farmland. Third, hard assets and offshore diversification. Real estate in stable jurisdictions. Art, collectibles, assets that can't be debased by central banks, and offshore accounts in Singapore, Switzerland, Cayman Islands, Dubai. The money leaves the U.S. financial system entirely. Fourth, bunkers and escape plans. This sounds extreme, but it's documented. New Zealand became the preferred destination for wealthy Americans building properties. PayPal co-founder Peter Thiel bought New Zealand citizenship and land. Bunker construction companies reported record demand from billionaires in 2023 and 2024. Luxury survival compounds in Montana, Idaho. These people aren't buying vacation homes. They're building self-sufficient properties with water, food production, security, preparing for societal breakdown. That's where the money went in 2024. Not back into markets. Into hard assets, foreign jurisdictions, and literal escape plans. Now let's connect this to the empire pattern, because this isn't new. Late-stage empires always experience wealth extraction by elites before collapse. Roman senators in the 3rd century liquidated assets and moved wealth as the denarius collapsed from 95% silver to 5%. Spanish nobility extracted gold even as Spain went bankrupt repeatedly in the 1600s despite controlling the richest mines. British elites moved wealth out of pound sterling into gold and U.S. assets as the British Empire collapsed post-World War II. Soviet nomenclatura transferred wealth abroad as the USSR disintegrated in the late 1980s. The pattern is universal. When elites extract this aggressively, the system is near breaking. Here's why. Healthy empires in growth phases create wealth. Elites get rich but reinvest. They build infrastructure, start companies, create jobs. Wealth circulates. Declining empires extract wealth. Elites don't reinvest. They pull capital out, convert to hard assets, prepare to leave. Wealth doesn't circulate. It concentrates and exits. This hollowing accelerates collapse. When elites lose faith in the currency and institutions, everyone else should pay attention. Bezos selling 8.5 billion in February 2024 wasn't confidence in Amazon. It was no confidence in dollar-denominated assets. Dimon selling after 18 years wasn't portfolio diversification. It was recognition that the system he runs is unsustainable. Now here's the piece for regular people. Retail investors are the exit liquidity. When Bezos sells 8.5 billion in Amazon in February 2024, who buys it? Retail investors, pension funds, mutual funds, people without insider information. They see Amazon as a great company. They buy. Meanwhile, Bezos, who knows Amazon better than anyone, is selling. This asymmetry is by design. Insiders have material non-public information. They know revenue projections, regulatory risks, competitive threats. Retail investors have quarterly reports and CNBC. By the time problems become public, insiders already sold. The crash happens. Retail loses. Insiders are already in gold, farmland, offshore accounts. Let me show you the timeline because understanding the sequence matters. 2007 pattern, early 2006, insiders start selling. Market hitting new highs, economy looks strong. 2007, selling accelerates, subprime cracks appear. Bear Stearns hedge funds collapse July 2007. Countrywide nearly fails August 2007. Full crisis hits September 2008. Lehman bankruptcy. Market crashes 40%. Insiders who sold in 2006 and 2007 are out. Retail who bought at peak lose half their savings. 2024 pattern, early 2024, insiders start selling at record levels. Market hitting new highs, 9-to-1 sell-to-buy ratio. The highest since first quarter 2021. Now it's December 2025, 10 to 12 months after peak selling. If we follow 2007 timeline, stress appears next. Cracks in financial system. Then full crisis 12 to 18 months after peak insider selling. We're right in that window now. Let me give you the indicators to watch going into 2026 because if this pattern holds, we'll see specific signals. First, credit markets seizing. In 2007, asset-backed commercial paper markets froze. Lenders stopped lending overnight. Watch corporate bond spreads. If investment-grade spreads blow out, credit is tightening. Second, unexpected bankruptcies. New Century Financial filed bankruptcy April 2007. That was the canary. Watch for large companies that seem stable suddenly filing. Third, Fed emergency interventions. In August 2007, Fed made emergency rate cuts and opened discount windows. When the Fed panics, crisis is here. Fourth, forced mergers and bailouts. Bear Stearns sold to JP Morgan in March 2008, orchestrated by the Fed. When regulators force mergers to prevent failures, system is breaking. And fifth, volatility spikes. The VIX spiked above 30 in August 2007, hit 80 in October 2008. When volatility explodes sustained, crash is underway. If we see these signals in late 2025 or 2026, the pattern is playing out exactly as history shows. Now here's what you do with this information. I'm not giving financial advice. I'm showing you a pattern. When insiders sold at record levels in early 2024, they were positioning for what comes next. Not predicting it, creating it through coordinated selling that triggers cascades. History shows what happens. Crash comes 12 to 24 months after peak insider selling. We're now in month 10 to 12 of that timeline in December 2025. Retail investors who bought at the top in 2024 are about to see what insiders saw coming. Insiders who sold are already in hard assets waiting. The question is whether you recognize the pattern before it's obvious. Because once it's obvious, it's too late. The selling already happened in 2024. The crash is unfolding right now as we sit here in December 2025. And the exit liquidity, that was you if you bought what they sold. This is the empire economy, where we decode the patterns that repeat as empires extract and decline. Billionaire selling at 9-to-1 ratios in early 2024 wasn't a signal to sell too. By the time you saw the news, they were out. It was a signal the endgame was starting. Late-stage empires loot themselves before collapse. Roman senators, Spanish nobility, British elites, Soviet apparatchiks, American billionaires. The wealth extraction pattern is identical. The only question is whether you understand it now in December 2025 as the consequences unfold, or whether you'll realize it later after the crash completes.